this is problem 1A. It's on page 35 in your textbook. What I'm showing you is a completed form, but I want you to think about it one line at a time. And what I'm going to do is help you know how to figure out what accounts are affected and whether they're getting bigger or smaller. So assets are something that you own. Liabilities are things that you owe. For example, if you had a credit card with Sears or Macy's, something like that, would be accounts payable. There's a capital account, which is where you record investments. The drawing account is when the owner withdraws money for personal use, similar to when you go to a bank and draw something out of your account. Same principle there. Revenue is when you make a sale. Expenses are when you spend money for something that you can't resell, basically like rent and insurance and things like that. And I'm just making a correction down here for later. Okay, so I'm going to look at transaction A. Notice that there's an equal sign here. Assets equals liabilities plus owner's equity. The thing that increase owner's equity would be capital when investments are made and revenue when sales are made. Things that reduce the owner's equity would be drawing, things taken out for personal use, and expenses. But assets, whatever the assets are, equal the liabilities plus the owner's equity. So I put a green stripe here just so you know that the left and the right hand side of the equation have to balance. Looking at transaction A on page 35, it said Larkin deposited $25,000 in a bank account in the name of the business. Okay, so looking here at transaction A, the cash account is getting bigger. So if you were writing this by hand, you could put a plus $25,000 here. Cash is going up. There's an investment being made, and anytime you have an investment, it goes from the capital account. So here's the capital account. Before the balance was 0, now it's 25,000. So if you were doing this by hand, you could put a plus 25,000 here. Now notice in this transaction, the left-hand side of the equation, or the equal, has gone up and also the right has, so this equation is in balance. And that always has to happen. Looking at letter B, paid the office rent for the month, $950, check number 1001 for rent expense. When you write a check, your cash is going to decrease. Now, if you're doing this by hand, you can put a minus in front of the $950, or you can show parentheses to show that it's a negative figure. Cash is going down because we're spending money. We're spending it on rent. So rent before had a 0 balance. It's going from 0 up to $950. So this is a plus over here. This is a plus to the rent expense account. Now, even though this is a plus over here and a minus over here, this line is still in balance because anything in the expense column or the drawing column will be subtracted from the right side of the equation. Because see the minus signs here? This is a minus to this side. Drawing is a minus also to the right side of the equation. Looking at letter C, we bought supplies for cash, $357, wrote check 1002 for supplies expense. Okay, here's transaction C. Cash is going down, so it would be a minus 357. Cash, we're spending it. We're spending it on supplies, which is an expense. So the supplies expense is a positive number. Okay, look. Okay, looking at letter D, in transaction D, we bought office equipment on account from NYC Office Equipment Store, $8,956. So office equipment is going up That's a plus. Now we owe the money. That's an accounts payable, a liability. Before we had a zero balance in accounts payable. Now we owe $8,956, so that's a plus also. So we plussed on the left, we plussed on the right. We're in balance. Looking at letter E, we bought a computer from Warden's Office Outfitters, $1,636. So our office equipment is getting bigger by $1,636. We paid $750 in cash, so cash is going down. The net effect here, when you take $750 away from $1,636, is how much we still owe. That goes into accounts payable. So we've increased the right side of the equation by $886. If you subtract these two numbers from each other, the left side is also increasing by $886. So we're in balance. Looking at letter F, we sold professional services for cash, so we made a cash sale. Our cash is going up and our revenue is going up, so we've increased the same amount on both sides of our equation. Looking at letter G, we paid on account to Warden's Office Outfitters, a creditor, $900. Wrote a check. So our cash is a minus to cash. Cash is going down. Also what we are doing is we are reducing the amount that we owe. So we have to make accounts payable decrease. So we're subtracting from this account also. So we subtracted $900 from the left side of the equation and $900 from the right. So we're still in balance. Looking at letter H, we received and paid the bill for utilities. So in letter H, down here, since we're writing a check, our cash is decreasing. It's a minus $382. And we're using it to get you to pay for our utilities, which is an expense. Expenses are going up. So this is a plus $382. So even though this is a minus to the left side of the equation, and it's a plus to the account, all expenses are minuses from the right side of the equation, so we're still in balance. Looking at letter I, we paid the salary of the assistant, $1,050, wrote a check. So in letter I, cash is going down, $1,050, and our salary expense is going up. And remember, expenses are minuses from the right side, so we're still in balance. Looking at letter J. And letter J, we sold professional services for cash, so we made a cash sale. Cash is going up, and our revenue account is going up. So we have the same amount going up on both sides of our equation. And letter K, the owner withdrew cash for personal use, so they wrote themselves a check. So cash is going down. Remember, when the owner takes something out of their business, they're withdrawing assets, so it goes into an account called drawing. Drawing before had no activity, so now it's going from 0 to 1,250. So this is a plus. So you've got a minus here on the left side, a plus over here. But remember, drawing and expenses both are minuses to the right side of the equation. So the account itself is getting bigger, but the effect of a draw is a minus to owner's equity. Okay, and last, what you want to do is you want to total up each column. If you take all the numbers that are in cash and add them together, or subtract point indicated in red, you would come up with $26,138. The total to our office equipment is $10,592. The amount that we owe, $8,942. The amount of equity is $25,000. The amount of drawing is $1,250. The amount of sales, $6,777, and our total expenses, $2,739. Now, to show the equality of our transaction, we would take both of our asset totals, add them together, which equals $36,730. On the right side, we're going to take liabilities plus capital minus drawing plus revenue minus expenses. And the number you hope to get is 36,730 because these two bottom totals should always equal each other. And this concludes this video.